Hey, Puppy Trades! I really think it's an awesome opportunity to be able to make videos about the financial markets during the election. And we can look at what institutions were buying before the results of the election played out. And we see the unusual ETF options volume screen today. There's a very large theme, and it's in the currency market. So I think that's going to be a lot of fun. We are going to talk about in this video the Japanese yen, Draftkings aggregate bonds, and a leveraged oil ETF. How fun. So there is a big currency theme. We're going to throw Draftkings in there just to get some growth as well. I did see DraftKings was on the unusual straddle or strangle screen. I can't remember which one, but it was on the long straddle or strangle screen. It's not on there anymore, but that's the advantage I get of looking at the screen during the day. A privilege I get to do during the day. So we're gonna look at the Japanese yen first. Actually, it's something that gets a lot of attention. It gets very sexy sometimes on FinTwit, and we see these big debates about the Japanese yen. We see 84% call bias taken for 407% unusual options volume on the Japanese yen ETF FXY. So clearly a call bias. Let's just go over the other ones that we're going to go through in this video. The ultra oil and gas ETF had 451% unusual options volume for this ultra leveraged oil ETF. And then we're also going to look at a straddle or strangle, not sure yet, that was bought on the aggregate bond ETF AGG. So a lot of fun in this video. Lots of option volume, statistically unusually backed. There are so many tickers. This is a great way to know what to focus on. When we get in this video, it's a big treasure trove. We're going to be very glad we looked into the stocks and ETFs that had unusual options volume today. Oops, I meant to go, oh man, I meant to go show you guys the unusual options volume that was bought first on the Japanese yen. We're going to see this was the most interesting lot right here, in my opinion. The December 20th lot, 956 calls and 667 calls bought for the 62 and the 63 strike for December. Very interesting. And then we're going to see again for the very next month for January. And I think that's going to end the trade, yeah, a little more. But really, we get the gist. January and mostly December, we saw a pretty unusual amount of calls bought on the Japanese yen currency trust. So very interesting. This is something that made a lot of headlines in August. Yes, everyone remembers the Japanese yen. I know FinTwit can be full of newer investors pretty frequently, but I know we all remember the Japanese yen. And obviously, I'm referring to hypothetical, non-existent, you know, investors because I'm the only one investing based on this information. But FinTwit, of course, is full of investors, and we were all making quite the big deal out of the Japanese yen. Sometimes we're experts in real estate, sometimes we're experts in oil and geopolitics, other times we're experts in EBITDA and Kager and moats. I think two of those were water related. Anyway, this one, the Japanese currency liquidity crisis, made a very big deal in early August. So we look at this ETF. 1, 2, wave 3 makes this very dramatic. Lots of gaps we see. That's the Elliott wave principle, is seeing these gaps within a wave 3. And the highest high on the RSI before a shallow wave 4 and a wave 5 that ends with momentum divergence. That was a large wave 1, wave A, in my opinion, very clearly subdivided into 1, 2, 3, 4, 5 waves. Wave 5 makes a higher high in price, but it ends with a lower high on momentum divergence. That's very interesting because if we see FXY make a dramatic wave 3 higher, and remember, this big gap right here was that big VIX spike. So this is something that I promise. I mean, I don't want to make promises, but I'm pretty sure if this thing gets running we're going to be talking about this ETF again. So that's one reason I wanted to make this video. If FXY is above this low of 57.17, then this is a large wave 1, wave A, subdivided into 5 waves, and ABC wave 2. I'm looking for a wave 3, wave C to begin. The equal legs target is 68. It looks like that guy is going to make a lot of money on these options. What's interesting about these options, they have very high gamma. We're going to see gamma of 12 and gamma of 11. That's a lot of gamma, and the reason that gamma is so high is because the general implied volatility, not the regular, not the relative implied volatility, the IV rank or percentile, just the general implied volatility for these currency ETFs is pretty low. They don't normally make big moves. He's taking advantage of this big dip. He kind of has to be right, or she kind of has to be right, and they're taking advantage of this low implied volatility, this big dip, and they're looking for, they're really trying to game something. This is like buying calls on Pfizer, buying calls on very low implied volatility stocks relatively that don't normally move. They have very high gamma, even when their stock prices are in the 50s and the 60s and the 70s, because those normally don't have high gamma. So we're going to see 68 is that equal legs target. Let's try to time it. Why not? This is September 16th to July 10th, about 2.5 months. Could 3 months from now, perfectly in line with his expirations or her expirations, 3 months from now, could this ETF be at 68? Could it? That's extremely aggressive, and that's not really even the purpose of this analysis. That would be the perfect, a little too perfect, if I'm being honest. Let's see. I get these time dips out. I connect with this low wave 1. Boom. Yeah, right there with his expiration, almost 1 day away for that 13-week time fib. If I connect the beginning of this low wave 1 with this high wave 1, let's see it for the big wave 1. Not quite at that wave 2 yet. A little further would be early January still. All right, that is the Japanese yen. Let's look at aggregate bonds. Actually, yeah, let's look at aggregate bonds. Then we'll do Draftkings and we'll do Dig. What did they buy on this aggregate bond ETF? We're going to see 796 calls for November 15th paired with 795 puts. So they bought a strangle, a 99 call and 98 put strangle on this ETF that's most likely being used to accumulate. What's that mean? This has a delta of 40. This has a delta of negative 40. That's a perfectly even delta neutral position. So we'll see. That's a pretty rare thing. It's a very large strangle, to be bought with not a lot of time. They're really trying to make a lot of money on a short term move on a straddle. What did we just talk about with the yen ETF? Lots of gamma. And why? Because we don't normally see these big moves. Once again, though, they're taking advantage of a pretty clear dip. Is it safe to say they're also taking advantage of? Oh no. Oh no. No, never mind. I can go far. I can go far. I can go down the rabbit hole and I can say crazy stuff, but I can't ever say these MMs are using Elliott Wave. Oh no. No, that one gets me in the wacky shack. Yeah, I can go basically anywhere, but I definitely can't say these financial institutions are using Elliott Wave. They must have access to some secret knowledge about the aggregate bonds moving forward or the election, right? But I love how that's much less of a conspiracy on FinTwit than that they're using Elliott Wave. So what would the equal legs target be? A little wide of an invalidation, a little closer can be found if I go to these retracements. Remember, I'm still learning to use these new retracements. Yeah, I'm still learning to use these retracements. Yeah, bar chart and the new 96.39. I'm going to call that dummy tight. 94.85 is a little wide for an invalidation because of how low beta this is. But I think this is 1, 2. Look at the RSI again. Wave 3, highest high. Shallow wave 4. Wave 5 ends with momentum divergence. And again, these bond ETFs were up big during that fear event with the yen. I mean, it's August 5th all over again. So, and now it's November 5th. So, anyway, the length of wave 1 placed at the wave 2 low. We're going to see this equal legs target is 104 for the aggregate bond ETF. Let's get into Draftkings real quick. We're going to see Draftkings right here. Wave 1, wave 2. I look at this 10.85, 10.69 just to make sure I've got it right. 3, 4. Look at this RSI again, the highest high made within wave 3, wave 4, wave 5 ends with momentum divergence. That's going to make a large wave 1. This is an A, B, C wave 2 correction, in my opinion. And then from this low, I can even get in a little closer to the daily chart, and I can see a very pretty impulse from this low as well. 2, 3, 4, and 5. So it's a clear 5-wave subdivision. We don't have that perfect RSI, but we do have that 5-wave subdivision. 1, 2, 3, 4, 5. Wave 1. A, B, C. Wave 2. So the widest invalidation for this weekly time frame is 28.69. A tighter stop is found by taking these retracements. I'll measure this perfectly. This high is 42.31. This low is 28.69. So we see it's right there at the 50% fib. A tighter stop than that 28.69 invalidation is 31.36. The 78.6% fib. So boom, that's kind of the ideal picture. Possible thumbnail candidate, we'll see. I thought that Japanese yen chart was pretty. Let's get into DIG real quick. This ultra oil and gas ETF, again, right before the election or during the election. 850 call spot for November 15th. That was the entire reading. I don't trade leverage ETFs directly. But they're interesting for my analysis. We look at this for this ETF. There's been leaders in this sector. Golar, Imperial Petroleum, Viper Energy, plenty of leaders. Vista Energy. It's been a stock picking sector. It's time for the laggards to play catch up, according to this person. That's 1, 2, 3, 4, 5 waves. Wave 1. On the day of the election with the yen. Remember that yen, what was that? Geopolitical or scare event. What was the aggregate bond with it? Geopolitical scare event. Oil. 1, 2, 3, 4, 5. Wave 1, wave A. Wave 2. Another wave 1, another wave 2. In my opinion, another wave 1, another wave 2. I'm looking for 34.23 to not get broken. In a large wave 3. of another wave three to be in progress.